Greg, before the break, interest rates, impact on the housing market. We've been seeing a lot of weird negative news come out from major media. Do me a favor, summarize the impact interest rates have on housing and why that should or should not scare real estate investors.
Yeah, great. I'm glad you give me a couple of more seconds to explain this. So clearly, if rates go up, the houses become more expensive, and people who are buying either an investment property or really they're talking more about the home ownership market are going to either not buy a property or buy a less expensive property. I don't, in my experience, 30 years in the real estate business, the first 20 of it not focused on investors as much, but running a big real estate company that mostly sold homes to home buyers. I know that people decide to buy a house because it's right for the timing of their life. They just decide which house they can buy based upon the affordability factors. If rates become more expensive, well, then they can afford less house, but they still move, okay? They still go forward. But the reason why I'm harping on it right now is I want to give people the tempo of the timing. When you see in October mortgage rates going up, and the next day you see a story saying housing stats came out today and home sales were down, and that's because the mortgage rates went up yesterday, it can't be, because the housing stats that got reported that day reflected transactions that actually closed 2 or 3 months sooner. That's how much time it takes for a closing to happen, for the deed to get recorded, for that deed recording to then get fed up into the National Housing Database to get reported by the Case-Shiller Index or whatever other housing and economic entities making that report. So literally, the sale was in June, the negotiation for the sale and the shopper's behavior probably was in May or even April. That's when they were shopping for the houses. That's when they made their offer. That's when they went into contract. They close in June, it goes into the housing stats, and then all of a sudden in September, the rates go up and they say, oh, the housing stats today reflect the mortgage rates today. They don't. The mortgage rates in September are going to impact consumer behavior in September, October, November. The houses they buy are going to close in December and January, and it's going to show up in the stats in February, March. They're always 6 months behind. The housing stats are going to be 6 months behind the actual consumer behavior in the field. And so when you see them trying to line things up same day, they blow it because I guess they don't know. I guess they don't know.
I suppose that's a question that I have for you. Why don't they just come out and say, hey, here's a misalignment here, but we want to give you the information so that you can make your own decision? Obviously, there's a perverse bent towards the negative on the housing market. I don't know why, okay? Because it's not as awesome as stocks. That's probably why. It's not as awesome as stocks. I think that's part of it. Because you can't, right? Because you can't make crazy fees with it. Unless
they're financial reporters. They're financial market reporters that are reporting on a financial market. And if they don't understand something as simple as housing stats today reflect negotiations that took place 5 and 6 months ago, if they don't understand that, they're always going to be confused. All right. And so this story talking about a battered housing market, that headline tells you something. And let me just try to line it up for you.
Yeah.
Whichever way you fall politically, you can't deny that certain media outlets hate the president, okay? Those media outlets, Google is part of that, okay? If you want to get your story picked up on the front page of Google, you write things like battered housing market. Okay, I hate to get political on this, but sometimes it's as simple as that, right? If you write battered housing market, people migrate to your story because it sounds scary and it shows up all over the place. You're going to find that when this clip comes out and it talks about how the housing market is healthy and strong, you'll never find it searching the web for stories about the housing market.
That's right.
All right. There's a bent towards the negative because if it bleeds, it leads. There's a bent towards the negative because it's not the sexy stock market. And for some, there's a bent towards the negative because they're trying to make a dent in the consumer confidence out there for reasons that have to do with having a political horse in the race, which I think is super unfortunate. But it's all the more reason why whichever way you fall politically is irrelevant. If you're trying to make your money grow, you want to be confident when it's appropriate to be confident,
100%.
And you want to be nervous when it's appropriate to be nervous. Right now, it's appropriate to be confident.
That's right. I have an idea. Maybe you and I write for major media as well, and I also think that we're some of the more clear voices when it comes to our online strategy and just writing blog posts and then being picked up in Forbes, etc. So what if we wrote a very terrible headline? And the first paragraph we said ... but ignore the headline. Right? Gotcha. Exactly.
Gotcha, Google.
Psych.
Why am I messing with Google and the Wall Street Journal? That's the biggest question here. Like, what am I stupid?
All right, let's get to David. He has a question for us here. David from Ohio. I'm a newer investor looking to invest out of state in a small town in Iowa where love Iowa, where I have some family nearby. I've analyzed 12 properties and have found one that would be a good deal making an offer on, a duplex that cash flows roughly $320, giving me approximately a 14% ROI, return on investment. I know the neighborhood pretty well, approximately 50% of the town rents, and it is primarily populated with blue-collar workers. The one thing that's holding me back is that when I did a bit more research, the overall population, approximately 16,000, is decreasing over the last decade or so, down about 3% a year. Is this something that would be worth my reconsidering the location of this investment, even though the numbers make sense to this specific property? Great question.
That's a phenomenal question.
Awesome question.
So first of all, I love the fact that he's picking an off the beaten track market. I love the fact that he's doing it because he has family nearby, because family nearby means surveillance. That means that you're there sometimes, but they're there. And if something weird takes place, you're going to be made aware of it. Population decline always concerns me, okay? Because the bedrock reason that that drives our picking of winners has to do with population growth. Population growth equals housing demand. Housing demand equals upward pressure on rents and values. And so if this was a protracted decline, my first question was, what's happening with the job picture? Who are the employers? Are the employers declining? Are they right sizing? Okay, when you see population decline, and I wish I knew what market it was because I look it up. One of the things I'll tell David is go to renterswarehouse.com, go to the investor marketplace, open a free account, and load those 12 properties you've analyzed. You can load them in one at a time or put them in a spreadsheet and upload it. It'll give you the analysis that shows you population growth, shows you job diversity, and shows you price appreciation trends, all of which are very long-term in nature. And it'll give you a jumping off point that you can then take that data and start doing some research around it to try to figure out. And I'm talking about research like call the human resources department at the biggest employers and say, are you folks hiring or are you folks firing? Like scratch around, do the research. Because here's what you might find. You might find it's a runaway situation. Like don't buy there because you've got industries that are dying. Like let's say it was the distribution hub for JCPenney, Sears, and Toys R Us. Okay, like those are 3 retailers that are going bankrupt. So no, that wouldn't be a good thing. Let's say it was something else. I can't think of an example right now because we're close on time. But find out what's actually happening. What you might learn is that it's turning itself around. That's happening all over the country. Places that were in a gradual decline are now going the other direction. So figure out what the reason is. Figure out if it's going to keep going the wrong way or turn to the right way and make your decision based on that.
Perfect example, Detroit, Michigan, right? For the longest time, Detroit was seeing population declines, and then we had a crazy fallout with the auto industry. And then guess what happened? You had the right person come in with the right intention, with the right capital, and turn that ship around, which was really, really beneficial for the city of Detroit. And now everybody wants to move back.
I'm so glad you said ship. I thought you were going a different way with that. You let it hang out there for a second. I was like, what's he doing?
You got to enunciate a little bit on radio. You don't want to kind of get yourself in a little bit of a doozy. But that's all the time.
But you're absolutely right, though. You're absolutely right, though. That getting under the hood and figure it out. You got a small town in Iowa. You may be the only person that figures this out, and it might be a double down time if you figure out that it's turning in the right direction.
And then you can relate it back to the stock market and tell everybody you got a 9-bagger. How about that? That's kind of funny right there.